four-digit number that quietly controls some of the biggest financial decisions in your life. It determines whether you get approved for a home, how much you pay for a car, and even whether a landlord will rent to you. That number is your credit score. And if you don't understand how it works, it could cost you tens of thousands of dollars over your lifetime. So let's break it down. Everything you need to know in just 5 minutes. A credit score is a number between 300 and 850 that represents how trustworthy you are with borrowed money. Lenders, landlords, and even some employers use it to make decisions about you. The two main scoring models are FICO and VantageScore. FICO is by far the most widely used. About 90% of top lenders rely on it. Both models use a similar range, and here's how it breaks down. A score between 300 and 579 is considered poor. 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good. And 800 to 850 is exceptional. Most Americans fall somewhere in the good to very good range, but where you land on this scale makes a huge difference in your financial life. Your credit score is calculated from 5 key factors, and they're not all weighted equally. The biggest one, at 35% of your score, is payment history. Simply put, do you pay your bills on time? Even one missed payment can cause a significant drop. Next, at 30% is amounts owed, also called credit utilization. This is how much of your available credit you're actually using. If you have a credit card with a $10,000 limit and you're carrying a $5,000 balance, your utilization is 50%, and that's too high. Length of credit history makes up 15%. The longer your accounts have been open, the better. This is why financial experts often recommend keeping old accounts open, even if you rarely use them. Credit mix accounts for 10%. Lenders like to see that you can handle different types of credit: a credit card, an auto loan, maybe a mortgage. And finally, new credit inquiries make up the last 10%. Every time you apply for a new line of credit, a hard inquiry shows up on your report. Too many of these in a short period signals risk. So why does all this actually matter? Let's talk real dollars. On a 30-year mortgage of $300,000, the difference between a good credit score and a poor one could mean paying over $100,000 more in interest over the life of the loan. Car loans, credit card interest rates, and even insurance premiums are all tied to your score. A higher score means lower rates across the board. And it's not just about borrowing money. Many landlords run credit checks before approving a lease. Some employers review credit reports during the hiring process. Your credit score is essentially your financial reputation, and it follows you everywhere. The good news is that no matter where your score is right now, you can improve it. The single most important thing you can do is pay every bill on time every month. Set up autopay if you need to. Just never miss a payment. Keep your credit utilization under 30%. If your limit is $1,000, try not to carry more than $300. Don't close old credit card accounts, even if you've stopped using them. That length of history is valuable. Diversify your credit types over time. A mix of revolving credit, like credit cards, and installment loans, like a car payment, works in your favor. And limit hard inquiries. Don't apply for 5 credit cards in 1 month. If you're just starting out and have no credit history at all, a secured credit card is one of the best ways to begin. You put down a small deposit, use the card responsibly, and over time you build a solid credit profile from scratch. Before we wrap up, let's bust a few common myths. First, checking your own credit score does not hurt it. That's a soft inquiry, and it has zero impact. Second, carrying a balance on your credit card does not help your score. Pay it off in full every month. You'll save on interest, and your score will thank you. And third, closing a credit card usually doesn't improve your score. In fact, it often hurts it by reducing your available credit and shortening your history. Your credit score is one of the most powerful numbers in your financial life, and now you understand exactly how it works. Start building good habits today. Pay on time, keep balances low, and be patient. Your future self will thank you.